Markets started the day softer overnight. German factory orders came in lower than expected, and this did indicate that demand in the Euro region could be slightly weaker than previously thought. This would not be good news. But most of the data over the past few weeks and the weakness has been stemming out of the US and a fairly weak household sector. This has largely been due to high unemployment and of course a slowing housing market. However, the US did receive some good economic data overnight, with one report suggesting that US retailers are now expanding at the fastest pace in 4 years. Markets were boosted by this report, and the Kiwi dollar also followed suit. On Thursday morning, the Kiwi is up, trading at 70.3 against the US and also up against the pound. China's second largest meat processing company, Kirchen, and two New Zealand companies, Timania Livestock and Foodcap, have signed an agreement that would see genetic and food processing technology sold into China. This is the first agricultural contract to be signed under the New Zealand and Chinese Free Trade Agreement. It is also hoped that it will open up further doors for agriculture into that part of the world. Economically speaking, it highlights the importance of free trade agreements for us here in New Zealand. China and other major Asian countries provide us with strategic opportunities for agriculture and also provide us with further growth prospects. Local New Zealand log and forestry prices have remained resilient over the past few months. Strong demand out of China has driven prices higher, and last week we saw only a very small decline on the CBA New Zealand Commodity Price Index. MAF's latest quarterly report has shown that over the March quarter, the harvest was the strongest ever. Taxes on logs out of Russia have been imposed. However, it is speculated that these will be dropped in time. Even with these taxes, Russian logs are now becoming much more competitive with New Zealand's logs because of recent rises in prices. Given this, as well as the potential for a slowdown in the Chinese property market, we would not be surprised to see some reversion in prices in time.